It has a market cap of 54.7. I'm talking here about Reinet. Okay, so this is one of the entities that came out of the unbundling and reorganization of the Rupert family companies. What these guys are is a Luxembourg-based entity which owns a big chunk of British American tobacco stocks.
70% of their net asset value.
The Rem Grow guys are not involved, but Johan Rupert is involved, and there's a Rupert International connection with a hedge fund type fee in there. Market cap 40, I've mentioned already, 54.7, but price to earnings ratio, not really the issue here. It's more of an NAV play. It says it's 4.36. Dividends also perhaps not that vital, 0.91%. Let's go straight to the share chart. It's largely reflected the fortunes of its biggest asset, which is that stake of about 4% or something of British American Tobacco, which has done well-ish in pounds.
Yeah, currently sitting at 68.1 million shares of British American Tobacco. Yeah, it's a lot of money.
But here's the thing. What happens with Reinet is that if its NAV in euros rises, then the management team that looks after this portfolio takes out a fee. Of course, that also means that when it doesn't go up, they don't take a fee. So I suppose that's got something to be said for it. But over the years, they've taken a lot out of the pot for themselves.
Yeah. There's the other...
yes, talk about what else is in there.
Yes, it's Pension Corporation, which is a UK-based sort of pension benefit, you know, like fund thing.
I'm trying to think of what the right way to describe it as well. It's not like a pension fund manager, but they write policies or cover or benefits and structures for pension funds.
Yes, for DB funds, which are
defined benefit funds.
Correct. You know, because those are structured by actuarial sciences. So they take the upside and, you know.
So they'll go to a pension fund and say, okay, we'll buy this from you. Our assumptions about the potential cash flow and liabilities are slightly different to yours.
Yes. And
what else? They've got some like property assets over in the US.
Which specializes in energy. They've got property. They've got something called Trilantic Capital, which is their other hedge fund thing.
Management stakes.
They've got huge assets under management there, of which some of them are for Reinet. There's lots of moving parts. And their own gold as well, at ETF.
But here's the thing. The problem with this is British American Tobacco, and recently we saw that British American Tobacco was hit because the
US
Federal Drug Administration in America is saying they don't want cigarettes to have
nicotine
at an addictive level.
Yes.
Which is like, what's the point of smoking if you don't have the
My understanding from smokers, apparently nicotine at any level is addictive. So I don't understand what the US is trying to do there. But as an investment, Reinet, 70% of their NAV is, unfortunately, British American Tobacco.
And British American Tobacco recently doubled down and bought more shares of Reynolds American, which is in the US, which is where the FDA challenge is coming.
Correct. So there's going to be a lot of challenges going forward.
Well, put that chart back up again, because does it show like a diminution at the end there? It does a bit.
It does. There's a dip there in the end. And, you know, as long as that's still an overhang over the business in terms of the US authorities and what they're doing there, I wouldn't be hot on this business.
Yeah, I'm going to pass on it as well. Okay, not hot on that one.